Hey everyone, welcome to our first ever episode. Today we've got a legend in the venture capital world, James Currier, general partner at NFX. If you've been following the tech scene, you know his name. He's been ahead of the curve on everything from social media to SaaS and now AI. We're diving deep into his thoughts on where AI is heading and what he's investing in and how startups can stand out in this booming space. Super excited to bring these episodes of Slice of Technology to you in collaboration with HumanX. Without further ado, let's dive in and bring James on. Hey everyone, thanks so much for joining me on our first ever episode. Really excited for the first guest to be James Currier, the general partner at NFX. James, thrilled to have you here. Huge fan. Thanks for doing this.
Well, thank you, Jared. Glad to be here.
I don't even have to ask you, tell me about your background or anything. Anyone Googles you, they're going to find everything about your background. You've been on a lot of podcasts over the years. You've had a lot of talks. So I want to dig right into really what we want to talk about here today is all things AI. And in particular, I know you've invested in a lot of companies in this space. At what point did you decide to place a focus on finding the right companies to invest in the AI world?
Yeah, so I read my first sort of AI book in the early 90s by a guy named Hans Moravec. And so I've been looking at this for forever. We've been waiting for computation to get to the point where it starts to mimic human intelligence for a long time. And so we started making our first AI investments about 6 years ago. And we had developed a market map of about 600, 550, 600 companies that we've been tracking between sort of 2017 and 16 and today. So we'd been looking at a long time. By the time AI was sort of a thing in sort of September of 2023, we had made about 18 investments so far in AI related businesses, and we've continued to do that. We actually didn't make that many investments in AI between September of 23 and the next 6 or 8 months because the flurry of new companies doing things that didn't really make any sense was just overwhelming. And so picking through all that and finding seed stage companies where it made sense wasn't as easy as it had been in the prior 4 years. We had done stuff in gaming and in SaaS and in marketplaces and biotech and a lot of the different areas that we traditionally invest in at NFX Capital.
We've had a couple of your portfolio companies, mainly on the healthcare side. Pepper Bio has been on in the past, Incredible Health as well. But it always seems like your firm is at the forefront of these companies that go on to be unicorns, and not just creating impact, but creating substantial impact in the industries that you invest in. I would love to hear when AI became more mainstream over like the last 2 years, what were the initial worries you had about the space, and have those worries gone away or been replaced by new ones since then?
Yeah, no, I look, I wouldn't say we have any worries. I mean, look, I was there when the browser came out in 94, and we were there when the mobile phone came out in 2008. And now, we were right there in 2009 when crypto came out, and now we've been here when AI came out and sort of came out in 2016, 17, 18, 22. And I don't have any worries about it. These are technological innovations that then provide a substrate, provide ecosystem platforms for us to develop all sorts of stuff. And most of the businesses aren't going to be any good. That was true back in 1994 to 2000, and then the crash came. And we see this over and over again. Most railroads probably didn't work back in the 1800s. So this is a natural process of it. Our job is to try to invest in the ones that get big and try to avoid the ones that fail. But in general, we're going to have a lot that fail, even so. Even though we look at 8 or 10,000 companies a year and have a big team that process, most ideas don't end up working. It doesn't mean the founders are bad. It doesn't mean that the technology is bad or that we should have bunches of concerns. It's just that we have to go through that creative process. And we can use some patterns from the past to help us inform what we think might work in the future. But generally, you have to develop new patterns for the new technologies each time they come around. So, I think people were doing wrappers at the beginning. I think people were just doing incremental stuff with AI rather than doing something much more meaningful. I think that People were looking at it as a toy. They were overselling their business, saying it's more AI than it was. All those things happen, but those things always happen in every new technological phase. That's fine. That's par for the course. That's the way the ecosystem operates. And I think people are settling into things that add more value now. I think people are settling into really starting to think bigger about how we could change things. Remember, when the iPhone came out, we didn't have Uber for 3 years. It took time for entrepreneurs to say, which of these 28 new features can I combine for what industry to transform that industry? GPS, it was the map, and it was charging. Okay, or credit cards. And so once you had that, you focused on the right industry, the right combination of these three features of the whole iPhone. Then you have these breakthroughs. It just takes time sometimes. So I'm not too worried. I think now obviously the amount of money that's going in is causing entrepreneurs to lose their minds, to not have the right focus, to squander the capital, to get their employees to think that they can just spend or that they have forever. It's destroying discipline culturally, both for the founders and the employees that work with the founders. Very hard to manage. I've seen this occur for many. So yeah, there's lots of worries. There's things, hurdles to overcome. But as look, my founders and I started 10 companies that got to be worth more than 10 billion. And so this process we've been through ourselves personally and struggled with our own psychologies. Now we try to help the founders do that as well, and it's the same process each time.
Now, has the criteria changed? Like, I know you have a specific criteria that for many of your investments, you follow that criteria, right? Has there been adjustments to that criteria that you are applying to AI focused companies now?
There really isn't. We are a seed stage investor, so we're investing, $1 to $3 million for 15 to 20% of companies. We like to see defensibilities. We write about it extensively. We talk about, embedding. We talk about network effects, brand and scale. We're looking for those things and the possibilities in those companies. We invest in 7 sectors, fintech, prop tech, marketplaces, games, crypto, bio, space. Those are the areas we invest in. AI is being applied to all of them. We on our website we do have a sector for AI because there are AI tools and AI LLMs and fundamental, but generally everything is touching AI at this point. Maybe our rocket companies are touching it less because they're dealing with metal and whatnot, but almost everything touches AI at this point. And so the criteria remains the same pretty much across the board. And we try to do the same thing when the whole crypto wave came through, is we tried to maintain discipline and business is business and people are people. The technologies do change from time to time, but we can't rewrite the book every time. It doesn't prove out. We tried it, I think, in the 90s and the early 2000s, tried to rewrite a lot of the books. It doesn't work.
Which of these? So you mentioned obviously you've invested in many different industries. Which of these industries do you see the most immediately, the greatest chance of being transformed by generative AI?
Yeah, so we've got a graph that we put on an article on NFX.com where we talk about the legal tech industry, and we point out that where the LLMs are today in sort of 2024, what can they do? They can write code, they can write language, they can read code, and so you're going to see a lot of what you do is you graph these industries by what percentage of the job can the LLM do versus how valuable is that job. And so legal ends up being a sort of the upper right quadrant because legal is just language manipulation. And the amount we pay for the legal work is $750 an hour in many cases. So both the cost and the value and the job to be completed is very high. So you end up there. Same thing with sort of software coding. And so we have mapped out industries in that way, and we end up with sort of a blend of where we think the biggest impact is going to be, starting with coding and of sales and legal.
When it comes to the coding and legal side of things, though, it's a unique problem because those spaces are most of the time charging by how many hours they end up working, right? It's not as much project based. So, I've had conversations with a lot of law firms, with the lawyers that work at these law firms, right? Some of them were younger, just getting started. And they immediately were like, most AI application would make sense to start using this. But there was some internal pushback, right? Because So do you see it actually fundamentally changing, like where a lot of law firms are still operating on like an hourly basis to going to a more of a project basis because it's going to help them get these projects done faster?
If you look at the entire legal industry, certain work is quite project based. We have a company we invested in called EvenUp, which is working with personal injury lawyers, which is very much project based. If they get their money, then they get 33% of whatever they win for the client. And so when you look at those parts of the legal industry that are more project based, the AI is really making a big difference in sweeping in. And last time the company raised at a very high valuation when we invested on 12 or 13 post, and just 2 or 3 years later, the revenues are just exploding. And we've done that repeatedly in other cases inside the legal industry. We also see that you're going to have a lot of AI companions in the legal space, so that people don't have to go to lawyers to get certain parts of their legal work done. They might have to have the final sign off or the initial meeting, but the whole stuff in between, they'll be able to do more and more themselves, just like we have no code, right? So non coders can do more stuff than they could 8 years ago. Going forward, all of us non lawyers will be able to do more legal stuff than we were. That AI is going to help with that. So different pieces of the industry, I think, will be changed sooner rather than others. And the core hourly corporate New York, you got to trust me. We're going to work on this together. We got to fight the bad guys. That's going to continue to be much more human and less AI. But other areas will be transformed entirely.
What about this is still really kind of on the legal end, right? But it also touches upon like the investment bank when it comes to like acquisitions and like the due diligence. I know that still touches upon the legal side, but do you see have there been any companies you've come across on the due diligence side for like those M&A activity that are having a big impact or will have a big impact?
Well, we see tens of these companies using AI to automate, the sort of lengthy associate work, analyst work within the financial industry, whether it's M&A or investment banking or private credit or venture capital or PE. Or yes, there's tens of companies in every category trying to use AI to streamline what is today a very intensive and process that only super smart people can do, and it takes them weeks to do it. And yeah, it's going to be helpful. And I don't know that they have transformed the world yet, but they are certainly getting their products out in the last 6 months, and we will start to see a shift or not over the next, sort of 18 months. So it's happening now.
I know this is not a uncommon thing in any space, but it seems like when you go on these different websites and you're searching and you're seeing the alternative of a certain company, it seems like we're in a phase right now of the head scratching. I can't even tell what the core differentiators are for some of these companies. Why, and I could be wrong here, but why does this seem more common right now than maybe I guess we've had it in years past too, but maybe just because it's newer. But it seems like a lot of Me Too type companies are out there.
Well, look, when Facebook opened up their platform in 2008 or 9, you had millions of apps built that were all kind of the same. And in the end, Facebook shut that down after 6 or 7 years because only Zynga proved to be useful and they didn't want to be a gaming platform. So they got out of that. You're going to see the same thing happen with AI. You're going to have a flourishing of energy and people all claiming the same sort of stuff. And most of it won't work. And then some of it will. And then within the 16 attempts at this particular category, this one company will end up taking 60%. Number two will take 30%. Number three will take 10%. Everybody else will die. This is the pattern. This is the math. This is what will happen. I don't know that it's super different than it was in 94. Well, it was different in the sense that we were trying stuff for the first time, but now we all know what SaaS is. We all know what the internet is. We all know what a mobile phone is. And that's been true for 15, 16, 20 years. And so everyone knows what the patterns are. So everyone's coming up with the same ideas. We actually published an article. You asked about concerns about AI. We had so many conversations with founders a year and a half ago where they're like, "Oh, I'm growing like crazy. You have to invest." I'm like, there's about 25 companies doing your exact same thing. And the founders are like, "You're lying to me. You're lying to me." And I said, "Okay, fine. We'll publish our Excel spreadsheet with all of these tabs in all of your categories, and you can see that there's 20, 25 people, 60 people doing your exact same thing. And if you go to their website, there's the link to their website. They're using the same words you are. And this has been true in AI now for, I don't know, 18 months. Everyone's doing the same stuff. People have to get into the more interesting areas outside of the obvious. And when you're a young entrepreneur in particular, you get an idea, you think it's good, you put up a little thing, it takes you a week, you start making $20,000 a month, you're like, oh my God, my life's amazing. I got to go to get, NFX to validate this and help us grow. And the fact is everyone else had the same idea. So you have to be an expert, you have to be a real entrepreneur, not an entrepreneur, and you got to be digging in on some of the more interesting questions, deeper questions, and the bigger questions about how do you actually transform industries, not how do you supplant or do incremental changes. And we just as a venture firm, we have the opportunity to wait around until those better ideas come along.
I read an X thread recently. I think it was within the last couple of days that I think you commented on it, but it was one of your colleagues that put it out regarding market sizing, and what you really look for is a wedge. And I would love to dig a little bit deeper into that as it relates to Gen AI. What wedges have you been seeing in terms of market size that are really exciting you?
Yeah. So from my perspective, the wedge is about how you peel open the market size, but it isn't the market size. So for instance, Facebook used the wedge of college photo sharing as the wedge to get real identities in a social network. So that a product ended up being, over 20 years, it was real identities in a social network, but the wedge was college photo sharing. And so the TAM, I think, is actually very different from the wedge. And what you're looking for is a combination. You have to have a dialogue between what's the long-term opportunity or the mid-term opportunity, and what's the immediate wedge we use to open up these markets. Because if you don't have a good wedge, you don't have a low enough CAC, you don't have enough acceleration to get away from your customer, to get away from your competition, and the incumbents are going to have time to come in and squash you. Now, in 1994, we didn't have a lot of incumbents. But now we have a lot of incumbents. Right? We've got over 1,400 unicorns, and they each have 16 to 1,600 salespeople who are out there blocking you and your idea because they want to hit their quota, and they want to have a relationship with your customer. We didn't have that in '94. It's wide open. Right? It was sort of like settling the West. In the 17 and 1800s, there's nobody out there except poor Indians who got killed. So the point is, there was a wide open space, and now it's not wide open. You have to find enough of a wedge to press out not only your competition, but also the incumbents who are going to want whatever TAM you find that they hadn't found before. So there's a dialogue between the TAM and the wedge.
How do you see, like, what's your advice for startups to compete with some of these incumbents today? Because obviously, some of these companies are not going to get the immediate traction that they need to warrant maybe an investment from you or get maybe on your radar, right? But that doesn't mean they won't be around in some time to either get your interest a little bit later or one of your colleagues. How do startups compete with some of these larger companies in the AI world?
Yeah, there's a bunch of ways. From my perspective, the biggest one is coming up with a way of just blowing up the existing order. People have their mindsets about how things are supposed to work. And, we've seen a lot of this, let's say in the recruiting space, where people are like, we're going to take this applicant tracking system, this ATS, and we're going to add AI, which will make it faster and better. And I'm like, why don't you just get rid of the ATS altogether? AI should be able to do everything so that it's literally just done in email. Why don't you make email the interface? Can you solve hiring while people stay in their email? Like, think of it, like, blow up the whole industry. And people are not typically willing to think that big. They're not willing to think that revolutionary. So that's the first way, is to think in a revolutionary way about any industry you're going after. The second thing is to have a business model, how you charge, what you charge for, that breaks their old model. So for instance, instead of selling them software to do it, sell them the service. Say, I'll just do it for you. You actually don't need the employees you have, and you don't need to hire anybody else, because we'll just do it for you, and it'll come back to you in 4 hours, and it'll be much better than what they did rather than 2 weeks. And we can charge you, 1/4 the cost. And so the old people like, well, you need to buy our SaaS software. Yeah, but I don't want to hire more people to have more seats on your software to do the work. I can just send that stuff out to these guys through this website, and 4 hours later, I get the thing I needed. So you break what they were doing in the past. And then the other thing is just to find new types of customers who are now getting into the game. So, you can try to go to sell to the old enterprise folks, but what if you actually empowered a new generation of businesses to compete, to provide value? They are going to grow up on your software. They are going to use it as their infrastructure, as their operating system for their business. Put them in business with your software. Then you don't have to compete with the incumbents because the incumbents are busy with somebody else. So you're actually finding new markets. I mean, there's more ways of doing it, but those are 3 quick ones that I can say.
As we start to wrap up here, I would also love to hear your thoughts on, it seems like we're seeing a little bit of a shift towards smaller, more frequent exits in the venture capital space. Do you think we'll continue to see this, or will we actually even? Is this going to become more of the norm in the next couple of years?
Yes, I think that because we have so many incumbents in the software space, and we didn't in 94, you're going to see either quicker, smaller acquisitions by all of these guys, or you're going to see the ones that are intended to get big actually break through and get bigger than we can imagine because the markets are that much bigger. Because now everybody's using software. Remember, 30 years ago, nobody was using software. Now everybody's using software. I mean, we had some AS400s and we had some Oracle databases and whatnot prior to 94. But once we got the internet, we then are all using laptops and email and messaging. This whole thing has just happened in the last 30 years. There were no incumbents. There's like Adobe and Microsoft. There was a few. There's like 20 of them. But remember, in 94, it was a half a page in the Wall Street Journal in section B. It was called Media and Technology. And that was it. You want to read about Disney? You want to read about Oracle? You want to read about Microsoft? It was a half a page in section B of what that's what it was 30 years ago. That's how big the tech industry was. Now it's everything. Now it's what? 8 of the top 10 market cap companies in the world. So we've now emerged into this new vista where the incumbents are in our business. Right? The incumbents of the old world were in concrete and they were in steel and they were in cars. But the incumbents now are in software where we are as founders. So yeah, I think you're going to have a much more aggressive M&A, much quicker, much smaller. But then you're also, when you do break through, because everyone's using software, your opportunities are even that much bigger because now you have, 4 billion people using software and you can get to them instantly with your product. So it's definitely the case that this industry is evolving. When I got into the business in 94, we had 150 general partners in the United States, approximately, maybe 200, the whole country. On signal.nfx.com, there's now 32,000. There was 30,000 a few months ago. Now there's 32,000 people with profiles. These venture people have built their profiles to say, please let me invest in you. And this is the way founders should go and find investors because they're all building their profiles there. And I think it's going to be 60,000 people in the next 10 years. I think we're going to have 60,000 venture capitalists. We're going to have, double or triple the number of founders. And all of that stuff is going to have to get rolled up and M&A'd, and it's all going to change. It's going to come and it's going to go, and the government will restrict it more, restrict it less. Like it's going to be this beautiful dance. But thank God all the VCs are here. Thank God all the founders are here because our surface area of technologies for robotics and climate and bio and crypto and everything else is now much bigger than it was 20, 30 years ago. So we need all these people doing this stuff. And AI is going to touch every piece of it. So I think it's going to be an incredible 30 to 40 years of flourishing with this community, and AI is going to be right at the center of it.
I love it. James, I want to thank you once again for coming on and sharing some thoughts with us. I know our audience is really going to love to hear from you and look forward to future conversations and to just see how the AI space continues to evolve and change industries. But yeah, really appreciate your time here today.
No, you as well, Jared. Go get them.